We do have concerns over a global economic slowdown, and that is raising fears among investors. Some major business leaders at the World Economic Forum in Davos optimistic.
The confusion in the environment right now is it a slowdown or is it going into recession? Nothing we see says it's close to recession.
I actually believe that we should be super impressed with the resilience of the global economy over the last few years.
Just a little bit slower growth. It's not a recession or a decline.
Joining us now, Optimal Capital Director of Strategy, Francis Newton. Stacy, so you heard from the CEO of Bank of America, Cisco, and Coca-Cola right there. If they're not worried about a recession, does that give the Federal Reserve cover to be more hawkish next week, Francis?
Narrative that they are data dependent, because I don't think the markets are ready to absorb any more tightening. We saw the violent reaction in December. But remember, the Fed has pulled approximately 380 some odd billion off of the balance sheet thus far. And that was, basically started to run regularly in October of 17. So that averages out to be about 25 billion per month. This year, they've said they're on autopilot unless they have to stop the balance sheet reduction, and they're doing 50 billion a month. So last year, globally, 90% of the asset classes were down. 70% of the asset classes hit that magical minus 20% bear market number, and that was with the tightening that had occurred. So now this year, we're supposed to have double the rate of balance sheet reductions in the face of the slowing growth. So I don't know, but I'm watching very closely.
We have an up market this morning. Futures are higher by at least 0.5% across the board here. And do you know why it's positive when you have, Commerce Secretary Wilbur Ross with respect to the China trade negotiations saying we are miles and miles apart on a deal? Larry Kudlow's not walking that back this morning. And you have the Intel earnings, which are raising fears about, the tech sector going south. Why are we up?
Well, I think that we're up because we've sold off so quickly, so fast, so much so quickly. And the Fed said, look, we're stopping. And so the market was desperately trying to price that in. And I think the market tried to price in December this balance sheet reduction scenario. That was why it fell so drastically when they said it was on autopilot. So if we just stopped right here, then the market's fine. We're going to go up forever. But that's the thing, is they're actually going to continue reducing the balance sheet. And okay, maybe that's priced into the markets. But we have a record amount of debt worldwide. We have a record amount of debt in almost every sector. So when you reduce the money supply, which is literally what happens when they reduce the balance sheet, they just vacuum that money from putting so much in during that era of quantitative easing, and they're vacuuming it back out. What happened during quantitative easing? Market went straight up. So what's going to happen during quantitative tightening? Straight down.
So it's safe to say that you think the Fed is the biggest headwind for the market right now over the shutdown, over the China negotiations. It's the Fed?
Absolutely. Yeah. I mean, if you look at the volatility with the China trade, yes, the markets go up and down a few hundred points on the Dow. It's nothing like the sell-off in December for the Fed.
13 Dow components report next week. The trade ones, Boeing and Caterpillar, are among them. So we'll be watching. Francis, thank you for joining us.
Thank you.